Yo, what's up? And good morning, everybody. Man, usually try to get this right about where the market is done making its move. Looks like we're about done for the morning. So, man, what a move out of the gate. I was thinking this is going to be a holiday week and we may be kind of light, but we'll see. So far, I've hit all my upside targets for SPY. Wasn't sure if we were going to reverse or continue, but yeah, it looks like we might have a little bit of a pullback here. So we'll see. Except for probably my main trade, which is Netflix to the upside. Nothing is going hot and heavy. So without further ado, let's go ahead and get started. If you're new to this, welcome. Here's today's theme. Is the market cooked? Happy Thanksgiving week for anybody out there that does celebrate Thanksgiving with their family. It's a short week in the market. So what I'm going to do is really every Monday we go through what are some of the main headlines from the week before, what are we looking forward to this current week. There's not a whole lot on deck, and I'm going to try to keep this somewhat slow, or quick, just because it is we are starting to move a little bit in the market. But I do think that I really think that upside target has been hit. I don't know that we pull back, but we're going to talk today a little bit about what some of those like low volume weeks can look like also. So without further ado, let's go ahead and move forward. So really recap a couple of things that we do normally take a look at. Some of the major economic headlines, inflation. We had some really good data points coming out for the market last week, and we had some really huge moves. So I'm looking off to the side because, man, we are moving. Let me just get this really quick set correctly. All right, there we go. So inflation, we got CPI numbers, PPI numbers, and largely pulling back, which actually is a pretty good thing. So really good data points on the market, and I mean, as expected, the market actually rallied pretty heavily right off of some of those numbers. And I wanted to go through also last week. I put a post out there said, we did hit our upside targets that we outlined last Monday. So by the way, go back to these previews, and when we measure these average weekly moves, average weekly ranges, I do it maybe a little bit differently than most, but it's extremely accurate. And once we hit that target, we really kind of just stopped on a dime. And I posted something about the way that we had hit our upside targets. And the way that you look at it is if the market has moved the length of an average week within a 48-hour period, then we're typically going to go into a holding pattern. And that's exactly what happened last week, right? And actually the week before also. So just keep that in mind. If it's less than 2 sessions or 2 sessions or less, and you hit a full average week's range to the in either direction, it's likely a good time to kind of just stop, relax. We're not talking about a pullback or a retracement. Sometimes the markets just go sideways right off of that level, and that's exactly what happened last week. We did get a lot of data points, and some of the main drivers, housing and gas, are pulling back a lot of that inflation reduction. We do have some falling retail sales, so those numbers were pretty hot coming into the week. That seems to be cooling off, and all things are kind of pointing to this soft landing that everyone's talking about. Continuing claims, that's the jobless claims. We had briefly mentioned continuing claims last week. And that those were starting to tick up higher. They actually hit basically the high point for the last 2 years. And we have had a ton of Fed speakers coming in over the last week and a half, give or take. And some of those highlights from last week, really, Vice Chair Barr, so that's like right below Powell. Vice Chair Barr believes the Fed is at or near its peak rates. And remember, Powell said in his speech that he's not confident that the Fed has done enough to tame inflation. So this is kind of like this push-pull effect that the Fed is messaging. And quite frankly, I'm pretty positive that they are doing that on purpose. So just take that with a grain of salt. Whatever they say, it's pretty planned, right? There's nothing they have an idea of what they're doing. Boston Fed Collins, San Francisco Fed President Daly, both of them basically saying they need more evidence of cooling inflation before they can kind of give it the go ahead. But in general, the storyline is we're probably at peak rates for now. And then the question is, is there maybe one more hike left in the market, or are we starting to expect some cuts? And just as an aside, when we actually do get that first rate cut, more often than not, it's actually a selling point. So just keep that in mind. Like when the cut does come, it's not necessarily like okay, the market's ready to roll. A lot of times that initial rate cut is already priced into the market. And as long as the Fed kind of has that extra rate hike looming, or at least in their back pocket, that's probably going to be the best case scenario for the markets in general, at least to be a bull, right? What I'd say is right now we do have one more FOMC meeting in December this year. I'll get the date here in a little bit. But we're not pricing in a cut or a hike. We're pricing in that, everything's going to be completely the same. And, we get a little bit of data between now and then that may sway the Fed's decision. So we do want to be pay pretty close attention to that for now. Right? I do see some questions up there. I'll get to them in a second. So as we move forward in the week, and I'll pull up the current calendar. So this week we do have CB leading index, Chicago Board leading index. That actually came and went already today. Tuesday this week is going to be our biggest day of the week, right? So Tuesday midday we get the FOMC meeting minutes, which is essentially the internal notes of what they were talking about at the last FOMC meeting. That is actually a market moving event. I believe it's Tuesday after hours. We also get NVIDIA earnings. So I do expect NVIDIA to probably be a market moving event. And then Thursday, of course, we're closed. We usually get things like, Baker Hughes rig counts on Friday. We're actually going to get that on Wednesday. Wednesday is this is kind of like minimal data points, really nothing major. But we do get consumer confidence on I love you too, buddy. We do get consumer confidence on Friday as well. But so just as an aside, this is a holiday week. It's a very short week. We are closed on Thursday. The market is closed on Thursday. I expect the move to be made obviously this morning, and then maybe one more major move tomorrow during this FOMC minutes and whenever NVIDIA reports, right? After that, I would just relax. Don't expect much. One major thing to note about, markets like this is that we can have, yes, it's low volume, right? So we're sitting at about 20 million. We're sitting about 20% of the average volume right now. And you would think that the market's not really going to move a whole lot, but I would challenge that thought, right? So sometimes, and I can, you guys have heard me, maybe you've heard me talk about, I believe it was 2018 Christmas Eve, where something had happened, some headline hit, the markets, and we were open for a half day. Nothing was really supposed to go on. We know everybody's on vacation, but the market started selling off in a very violent, and I mean violent way. And, and there was nobody there to catch it. And there are times like that, especially when we get into this holiday season, that you can see some serious volatility. So I'll give you guys some levels today about for SPY specifically as to where those things may happen. There are some very key levels that we have to hold. We are holding right now. Market's in an uptrend, guys. We're going up, and I'll give you those upside targets as well moving forward. So, but this is probably a week where it might be a good idea to possibly be hedged in case we do get some of those crazy, whipsaw type of sell-offs, right? And again, just as an aside, this is a scenario when we have this kind of low volume that we can get some seriously heavy moves in either direction on very low volume. And that is a regular thing. We see that in all kinds of markets. So just because we're expecting low volume, don't expect that means low volatility, because a lot of times it's the total opposite. So I'm gonna hop in this really quick. So I'm just gonna go up to, this is this week. I'm gonna go last week because I do want to point out a couple of things. So prior week, and I'm gonna just move this impact up. We did get the budget statement, so I mean this is the deficit that we're talking about right now. Inflation rate. So this is our CPI. So the CPI month over month was expected to come in at 0.03 for the headline. What we call headline is including food, shelter, energy, that kind of stuff. Food and energy, sorry. And we came in at 0.2, which is actually good. It's slow, a little bit lower than consensus. The year over year, I don't think is going to come into that big of a play just yet till we get a few more months of maybe lower than expected inflation. Looks like we were pulling back just a little bit. I would not press any upside bets on SPY here, just as an aside, and I'll show you why. And then let's see, inflation rate year over year. This is the main one. So the month over month actual inflation rate came in at 0. This was a huge number, and this is Tuesday. So we can go into the charts. We'll look at Tuesday, and we'll show you what happens when we get the 0 print. And just inside, we hopefully may be looking at some negative inflation rate numbers coming up in the future. This is actually really good for the market. So pretty bullish in general. Like I said, really good numbers coming out. And, you know, the market moved in kind, right? So I think if you weren't already long, or you were maybe waiting for some of these numbers, it might have been, you know, kind of a bummer because you may have missed some moves. But just know this is why inflation's looking good. We had a lot of speeches, hero speeches. And then that was CPI. So consumer price index, which is like what is the actual inflation, basically factored by the consumer demand, like retail sales, CPE, or consumer expenditures, right? The expenditures and our current essentially supply. And then producer is PPI, producer price index. This is what the actual, let's say, manufacturer's inflation is. So we have the same kind of numbers here. We have what's called the headline, including food and energy, and we have the core, which is excluding food and energy. So including food and energy for PPI actually came in at a negative number when the consensus was at 0.1. So this is, I mean, this is way off of what the market was expecting. We did get our follow through after this from this number from Tuesday's print. We got retail sales. This is what we're talking about a little bit earlier. Retail sales cooling down a little bit ahead of Black Friday. And then the core PPI, which is excluding food and energy, that came in at a flat 0% when the market was expecting a 0.3% increase. So again, inflation is cooling. It's one good month, really, maybe 2, something like that. But it's not necessarily enough for the Fed to be like, oh, we're going to reverse course now, right? So we need to have higher rates for a little bit longer while we continue to see this inflation readings actually pull back a little bit. And where were we? I think it was jobless claims. Where do we have jobless claims? Inflation, retail sales down. Jobless claims. So 231,000 versus the 220 expected. This is, again, this is about a full year's worth of data. That's just the chart that I'm hovering over. And again, this just kind of shows you this is that two-year high on the jobless claims. So again, not as many people working necessarily, a little bit less spending. That's really good for inflation. Inflation is also coming down at the same time. Everything looks good, right? That's ideal. And we want to see that all kind of come factored into that lower GDP estimate that we'll get later on. Let's go into this current week, just so we have a quick look. So this week, we got one. Yeah, so we got the leading, and this is, I mean, if you want to look at this, it's not really leading indicator, but they basically take all those data points that we've been going over forever, kind of put them all together in one, and this is what you get. We're about to get a 20-year bond auction in about 4 minutes. So we know how the bond auctions have been moving the markets. I would just heads up on that. We'll see if that moves the markets, but we will catch that live right now. That's what this little line is happening for right now. Tomorrow, that's the big day. So this is about midday, 11 a.m. Pacific. So that is about 9 a.m. Eastern. We get the FOMC minutes released. That is a market moving event for sure. And then Wednesday, we get durable goods, not so much. Jobless claims, like we were saying last week, it was a 2-year high. So we want to keep that at least on watch for right now. That's not going to really be market moving. It's just going to be a talking point for a lot of people. We want to see this at least hover around 230 and maybe go. I mean, a little bit higher is fine too. It's not going to be a really bad thing unless we're at like 300s. That's when it's going to be, holy crap, that's a big deal. And I mean, that's pretty much it. So this, like I said, we get Wednesday rig counts that we usually get on Fridays. Thursday we're closed, and we do get some global PMI readings for the S&P on Friday. Cool. So that's what we have. Let me see this one. Do you think we entered a bullish market? Yeah, Shiva, we are going up, my friend. We are absolutely going up. This is a bull market. We talked last week about the Santa Claus rally. And, you know, what I'd say is we are in the midst of the Santa Claus rally as we speak, right? There's usually like that first kind of press. And then once we enter the actual holiday season, so we're in we'll go like the eating season right now. So that's, what is it going to be? That's Thursday or Thanksgiving and Christmas and then New Year's. We get this kind of lull. So I wouldn't expect like a complete rocket ship to the upside. But you know, there are, yeah, it looks really good. And the pullbacks during this holiday season, what I was trying to say earlier is that if we do get them, they might be really scary, like really violently scary, just because there is such low volume. But more often than not, they end up being like kind of like buying opportunities. I will go through some of the levels on SPY as we move forward. I don't want to get too hung up on that. But yeah, definitely, you know, definitely something to watch. We got 2 minutes before the bond auction. So I want to show you guys what bond auctions do the market too, by the way. Justin is asking, am I in any longs? Yeah, man, I'm long. I'm long a lot of things for sure. Watch that timeline on Twitter. I mean, I'm very long. I'm not long Netflix. Currently long Tesla. Maybe not the best. Long a lot of stuff. I will go through the Netflix chart. I think that's a major breakout. I mean, we talked about this Microsoft breakout a couple weeks ago. I think that's going to be a $400 stock before you know it. But let's go ahead and take a look at so this is what I do is I take the Dow 30 components. So the 30 components of the Dow, 30 largest components of the S&P of the market. And we kind of track their earnings, right? And so this is really important stuff to be aware of, especially when you hear people talking about, you know, peak earnings that they were talking about in this Q4 of last year. They're like, or Q1 of this year is like, oh, we're peak earnings and blah, blah, blah. And it's like, you know, we were looking at this because we tracked this live and we're like, yeah, okay, well, Q4, 17 beats, 11 misses, 2 meets. And then as the market's still kind of like him-hawing about possibly peak earnings, I'm looking at this 26 beats, 4 misses. That looks pretty good to me. And we are staying very much at that level, right? So earnings look good. That's what I'll tell you. So far, we had Home Depot, Cisco, and Walmart report last week. I mean, wow, Netflix, this Walmart Target type trade that a lot of people have on, you know, that looks like it's finally turning around, right? I put a post on Target with my little story about some gift cards, and you know, I don't have you know, a major opinion one way or the other. I just, you know, I felt like, hey, maybe it could be a little bit bigger shrink number than expected. But look, there was really nothing good priced into that stock at all. And the same goes for a lot of retail, right? So we saw a lot of retail just exploding to the upside last week. Gap, I think, was another one. I think Macy's also. A lot of those really small retailers where there was nothing good priced in. They didn't have to, you know, remember, it's not about what, you know, how you actually report. It's about what your report and forecast is compared to what the street or what the expectations are. And a lot of these companies, there is just like no expectations whatsoever. So we are still seeing a lot of those that are so bad they might be good. to the down, like at the lows still. I will say probably oil would be getting there, especially with crude bouncing here. I haven't looked at some of these oil stocks today, but my guess is that they were at 52-week lows just the other day, so they're probably a good spot to start picking up. So earnings calendar for this week, I believe this is this week, yeah, November 20th. Here's another one, Zoom. So like, what's happening with the Qs? I don't know right now. We are exploding to the upside. Oh, you know what? I do know. It's the bond auction. So hello and welcome to the new market that moves on bond auctions. This is the 20-year bond auction that just went down right now. We were just talking about that, right? And so just as an aside, what happens when you have the bond auctions are absolutely moving markets, right? I'm assuming that this is going to come in any minute, but the candle is telling me that, hey, look, that was a good auction. And the rate probably went down because there was demand. The problem we've been happening, why these bond auctions are moving the market so much right now, is that really, like, we're trying to, like, we've been issuing all this debt, which is the bonds, right? As we issue debt, what's happening is, like, it's at a higher interest rate, and our cost to service that interest has been just like absolutely insane, right? And it's exceeding even our military budgets at the moment. Well, this is still not coming in. Looks like there's even more demand. This is usually not that far behind. We're about 3 minutes into that auction. But hey, look, the market's telling me all I need to know right now. This is moving higher. We should see 453.67 at this point, right? 452.93 was the upside target initially. We can go up to this 453.66. We'll probably tag exactly that and stop. Just saying. Oh yeah, those are my NFP levels. If you want to know how accurate these things are, you just watch. Anyways, I do think that oil and gas is in a really good spot, right? So I think yesterday was a buy, or Friday was an absolute buy on those. Oil we talked about briefly. We do know. Look at that. Look at that, guys. Let me get to a 1 minute. Look at that, to the penny. Sorry, just how these things work. Yeah, that was live. Anyways, yeah, I'm excited. My lines, pretty lines. You guys probably can't see this, huh? Probably not. That's the line. Literally wick to it, right there. Crazy, huh? This is the other one. So I think we should be trapped right here after that move, right? We're probably not going to go a whole lot more, and you'd probably be exactly that for the rest of the day, and that's how we'll close. That's my gut. Anyways, yeah. So this is still lagging. I don't know why it shouldn't be, but my gut is that it's going to come in higher than 5.25 for the results of that 20-year bond auction, unless there was something else that I missed that moved that market, but I don't think so. And if I did, oh well. But regardless, that's how that's playing out right now. I think, yeah, we're in a bull market for sure. I don't think that you can really question that. All like these upside targets are being, blown through. Netflix, again, I'm long. I've been long. I'm staying long. I actually got long here off of this break, but I do think that I think this is a $500 stock before the end of the year. Just my thoughts. Someone's asking, let's see. What is this? Oh, appreciate it. Thoughts on NVIDIA earnings. I don't think you should go for calls or puts. Straight up, Jiva. I think that could be. I think that could be a situation where the market's like, it's $500. I honestly think that might not go anywhere. It's a good possibility. Who knows? I would rather play this one after the fact. We'll just say that. What I do, when I look at things like this for earnings, especially since I'm an options trader, I want to find something where, I have an edge, if that makes sense. And, what I need to know is like, why does it say it's IV rank is 49 moderate? So last quarter, NVIDIA didn't move. I think you could have another one that's similar to that, right? Implied move was 9.6%. It didn't go anywhere. So if you bought calls or puts, you were crushed. I think it's very possible for that to happen again. Let me just zoom this just a little bit, right? What I'm looking at, so it's 0.1% on a 9% implied move, 24% the quarter before. I think, it's had some serious moves already. So asking for a lot more is going to be tough, right? But I think it's probably a safer bet. If you're long, you stay long. I wouldn't, if you're not long, I would wait to see what happens. Maybe get on a pullback. That 408 level, that was an entry spot for us in the server, if that makes sense. And then we pressed the bet. We had these 500 calls expiring last week that we've closed that were entered right over here after this break. So they're too long. So long here, or here, sorry. And I mean, at this point, we're kind of flat. So wait and see mode on NVIDIA for me. Does it look technically good? Yeah, I actually tried to take one on Friday off of this level, but it kept getting pushed down. So today it's a long, but I don't want to look like, I know just looking at those options are going to be insanely overpriced. Someone's asking about BABA. I don't trade BABA. I think that, I think that the United States and Western culture in general misunderstands BABA and Chinese equities as a whole. Trying to evaluate these or put a valuation based on what I'm going to say Western logic, meaning fundamentals, our fundamentals that we use in the U.S. stock market is a fool's errand, quite frankly, because they just don't. It has nothing to do with that. They're not a capitalist society, so I would just be very cautious on that stuff. Yeah, if they get too big, guess what's going to happen? What platform is better for trading? I use Thinkorswim. Yeah, Baba is so inconsistent. Yeah, it's like it's not even just Baba, right? It's let's say, what is it, JD.com? A lot of these looked great, right? Looked great. I'll just go to weekly. They looked great up here. And then look at this. This is a $100 stock, not 28, right? Pinduoduo probably had good earnings. This one looks like it's going to break out. But look, two things. Number one, these things don't trade during our main session like they do, but that's only us trading. Then they open up when you can't trade it into the Asian session. They do what they want, right? So don't expect, yeah. This is probably your best looking Chinese ticker at the moment. But again, remember, if these things get too big, then the government just starts slapping fines on them and takes their piece of the pie, because that's just what happens in a communist society. Sorry. Don't you think gaps? No. Oh, on SPY? No. So go to our YouTube channel and take a look at how we trade gaps. We have a very clean, crystal clear system on how to trade gaps. Do I think, here's the question, don't you think, and I think this is actually pretty important, do I think that the gaps will be, it's possible, but it's irrelevant for us as traders until we're trending in that direction. I think that's exactly what's important to know, right? So I will give them the fact that, look at this. This is a giant fair value gap, otherwise known as a low volume pocket. And this is massive, right? And I think this is what Live on the Edge is talking about. I think it's really important to note, right? So when do you trade for this type of thing? We're going to give you like a little School of Gains preview. When do you trade for something like this? We do our trainings every Thursday in the server, not this Thursday because of Thanksgiving. But if you want to learn this kind of stuff, how to actually trade it, it's one thing to know about it, but what to do when you see these things and how to actually profit on this stuff, That's what we go through, and we teach that every single week in our kind of like, I'll call it a mastermind session that we do on a regular basis. But so I'm going to give you the level right now is 447 spot 87. If SPY is trading below 447 spot 87 this week, then live on the edge, we trade for that gap, right? We trade for that gap initially to 446, stop, pivot, wait for a second. If we get below 446, then we go straight to 44264. That's how we're going to trade it. But we know that it exists. We don't expect it to fill until we're actually trending in that direction. For right now, what do we have? We have a series of higher lows and higher highs. Why should I think that? Why should anybody think that we're going anywhere lower, right? Until then. And it's a good thing to note here. We had a session gap on SPY a while ago, right? And we also had a session gap on SPY at 410, way down here. We had both, and we were very close to this 410 filling it. But what happened? Instead of going there, we just completely traded all the way up, filled this session gap all the way up to 410, and now we're sitting at a crucial level. Or if I draw this line, I'm just gonna close these off for a second. If I just hover over this 450 level, this is where we are, September 2021, right? That's a big deal. So we're all the way back here. We're just chugging along right now, going a little bit higher. Looks like we got a little bit more, probably 455. I'm going to give you 460 for this week, by the way. I'm just going to pull over our main charts just since we're already here. So what I do on these, by the way, is I take this orange box as an average weeks range. So at a certain point, if we were to retest this 448 level, which maybe we do, doesn't look likely, but it's possible. Number one, we created a fair value gap from this morning, but we don't trade towards that until we're below 452.50, right? We forget about that. That does not become a target until we're below 452.50. For now, 458 and change, 460 is actually, I'm thinking about three quarters of an average week's range. And I put the bottom of this average week at 447.80, or basically where the bulls stepped in last week. And I use a 30-minute candlestick chart because you can see a lot of this pretty clearly, right? And so what I mean, this is, I believe, Tuesday. I'm sorry, what day was it? Let me get to my calendar really quick. So Tuesday the 14th is right here. That's when we got our PPI number. So a huge market moving event, right? It just shot up. If they missed it, where did the bulls step in? They stepped in literally that day, right here, right? Right here at 447.80 and change, right? So that's why this is a main level for me. Once, twice, three times that same day. Did they defend it? Yeah, you bet your ass they did, right? 448, they defended it. Not Wednesday, but Thursday. Also, Wednesday, we got a little bit of a follow through on that PPI number. And here we are, right? Here we are doing what? Breaking this range, making yet another new high. So no, I'm not expecting that we go down and fill this fair value gap. Not yet. I'm not even thinking about trading there until we're below that 448 and change level, or 447 and change. But it's good to know that it's there, but it's also good to know when to trade for them and when not to trade for them. I think that's even more important. So as an example, did you want to get caught in puts today? That would suck, right? Like that would really suck. But yeah, appreciate you guys asking all those questions for sure. So where was I this week? So let's just give you a couple measurements. I'm just going to quick time check. We're probably okay. So again, I'm going to go 460 for the upside target. There is a couple, and that's going to bring us just slightly under an average week's range. Honestly, if we did a full average week's range, that would take us to like 462. That's possible, right? And where does that land us? So that actually land us at a very critical point also. Boom, right there, 461.20. Wow. Look at how this lines up. So when I take an average week's range, you guys, I didn't know that was going to happen, but this is just the low of today. If we just continue to go up, right, a full week's range is going to be 462. So this is an example of if we make this move in 48 hours or less, then we expect a stall, right? And so what I wanted to do is I wanted to take last week and just show you exactly what happened. So this is Monday's open, right? At the low, our measurement here, boom. We actually hit this in one session, 2 sessions flat. At that point, I post, like expect a sideways move. Doesn't mean like the markets are either moving or like running or resting. Sorry. Markets are running or resting, and that's the saying, right? So if you make an average week's range, if you move the length of an average week within a 48-hour period, expect that the market goes into a rest period. And that's exactly what happened, right? And I believe also the week before, something like that. What was the week before? Week before was the 13th. Oops, 6th. 4, 5, 6. So an average week's move range. Was it this week? Maybe it was the week before that. Anyways, 30th. I think that's the full week. And we stop, right? And then we get into the 6th. Oh, the 30th. We're way down here. Yeah, so stop, pivot, rest, and then go. Anyways, yeah, we make that big of a move. If we do it again, I would expect to rest up there if we do it in a very short order. And what would happen? What do we have anything that would get us up there? Probably it would be NVIDIA and FOMC minutes. So again, that would be max. For right now, we're kind of in a very heavy overhead supply. Told you we'd stop right there, and we have. Doesn't know what else to say about that. Do you use Fib? So he's asking, join the server for sure. We do all this training like all the time. We show you exactly how we do. Let me see what other questions. TOS, yeah, we got that. You guys got a lot of questions. Cool. So that said, here's an average week's range on the Qs. We're actually about to extend that from last week. I would take the same thing. So the same thing. Same kind of levels on the Qs we want to look at. This is 338 is that major support level. As long as we're above that, we're trending higher. I'm not really thinking puts below that. At this point, we've extended all the consolidations from last week, so we can expect to go to the next level. It's just whether or not we see it sooner than later. So we have this fair value 397. We got to get through 390 first on the Qs. Let me just see where we are right here. 388. So I'm going to assume, yep. So 388 is going to be the major level now. Earlier today, if you asked me, it would have been 383, but now it's 388. As long as we're over that, we're still trading higher. I'd be looking at, wow, 400 actually brings us to an average week's range. God, is that insane? That's insane. Can you guys believe we're talking about Qs at 400? Out of control. Diamonds have been looking like the most constructive for a long time. I think we just continue higher. Probably I think this was one of the best defined bases. But your biggest beta trade is going to be IWM. So IWM, this was an average week's range. We did move an average week's range last week. If we do it again, that's going to put us right below 190. Holy camoli. And there's your session gap right here. And so at this point, so here's a good example. I'm looking at session gaps now because we're trending in that direction. I do know that on IWM, we have a huge level that we need to get through of overhead supply at 182.50. So this is going to be target 182.50 on IWM. We need to get through that first, and then we'll see where she goes. But you see, we ran right into that last time. Hopefully we crack it this time. I think we probably will. We'll see. But this is the one that's lagging, right? And this is a story of interest rates. This is our small cap sector. This is a story of, consumer spending and things like that. We're kind of battling on both fronts, right? So rates are coming down, yes, but so is consumer spending kind of slowing. But if this is, at this point, this is a very clean base. And you guys know what this looks like. I don't need to tell you any more than hello, if you're a pattern person, you're breaking here now, and I am long here now. So if someone was asking for what am I looking for long, I think this is probably my best risk to reward and highest what we call beta trade in the market. So as long as we're trending over this 178, we are filling what we call here, this is a low volume pocket. Here, we are in the pocket. So we should get sucked right up into it and then see if we can hold it from here. But this is probably like the most, it could be a very big trade. And typically, as an aside, the small cap sector doesn't really get their feet underneath them till probably January. So this could be like a 6-month trade to be along this whole sector. All right. Netflix looking to buy calls. You know, if you're in the servers, this is the thing. I sent this trade a long time ago. If you want to know what that looks like, here's the server. When we send things, and you probably can't see them, Netflix 1215 calls, December 15th, $500 calls sent at $2.80 a piece. They're a little bit more than that. IWM 185 calls for December. This is, and I've already been trimming Netflix, but yeah, I think we go. I'll just take a quick look at this Netflix chart. Let me get back here. And when I do our real analysis, it actually looks like this. So multi-time frame. Oh, before I go there, 2 things to note. So on our general, like what are we looking at for confluence and things like that? So SPY, Qs, diamonds, all in uptrends, right? IWM, redheaded stepchild of the market, kind of doing its own thing right now. It's the biggest catch-up trade right there. What I want to see in the meantime for confluence is I want to see the Dixie continuing to come down. We're on spaces with Jordan and them as what's my highest conviction short? The dollar, right? Where are we at? We are continuing to go lower. As long as this continues this trend, that's bullish for equities, for US equities. TLT, that's your long bond. This is rates. So if there's demand for bonds, the rates go down and the bonds themselves go up. That's what you see here. You can, I think it was TNX. No, TNX is the ticker for the yield itself. So that would be inverse to the bond. So 10-year yield coming down. That's bullish, again, for the bonds and should be hand in hand with the dollar index itself. VIX trading at $13. I think she's at $12, give or take. Not even worried about this. I will look at gold. I think, one thing to note. So gold usually has an inverse relationship to the dollar. So if the dollar's going down, gold typically goes higher. I think this is a situation where you can be long both gold, bonds, gold, bonds, and equities as a whole, right? Does gold break out? We're not in breakout mode right now. We kind of sold off. I was long gold, am long gold, hedged it here, right when we said a couple weeks ago where we had a directional trade coming here in gold, took that to the short side. Probably closed out a lot of way too early, but whatever. And we're reclaiming that breakdown level here. So as long as we're holding on gold futures 175, I think that's constructive. Is it in breakout mode? No, right? No, not yet, right? Why? Because as long as commodities are more attractive, it's going to have a really hard time breaking out. This is the one here, crude. So CL is crude futures. I think this is a very much an upside trade, back to that higher, like upper trading range, right around like maybe $90. I'd be long here now for sure. There was some notes, so it was looking like major sell-off until the last couple of days. I don't know why, but we knew that there was going to be some headlines coming out about Russia, pulling back like the oil supply and a lot of that stuff going on. And what's true is that this is a global story. It's not a U.S. story, right? Russia doesn't want to see oil under $70. Globally, nobody wants to see oil under $70. A lot of these guys, they're not going to let that happen. So if they can do anything to change that, they will. This is looking very constructive to the upside. Period. I would just be very technical here. For as long as we're breaking levels, I think this is really good. All right, sorry. So back to, and I'll just do this Netflix, and then we'll shut her down. Right now, and you're right. This is not this is not letting up whatsoever. The biggest setup here was Netflix on the weekly. We went over in one of our last trainings oscillators. This is my oscillator here. I got a green flip on the weekly, right? So regardless, because that's not that important, it's just giving you a momentum criteria. We were breaking 419. We were looking at this kind of broadening range. We call it broadening range to the downside. And we also have one, whenever you have a downside broadening range, of course, we have an upside one as well. And we're looking here. So we're looking at this as that first target. That's why I'm trimming now. So this is like target one here. And honestly, I think we start to go into this 505 here for target two. And that's in the near term, which would bring us up to the top of this broadening formation. And I think that's where we're going in the near term. So for now, that's my view. It probably bounces a little bit and then stalls here around 5 something. But yeah, I think that's the next move on this guy. You could just look at this on the daily. Once we crack this upside wick at 488, I mean, we are filling a very heavy. Here you go. You can see it clearly. This is where we sold off on one of those big old earnings misses. So the question is Netflix now worth what it was worth in January 2022, right? And I think I think the broader story is yeah, right? So anyways, that's the view on Netflix, right? So you got to go kind of like day by day, candle by candle. If you can get a pullback and you hold over 470, for my sake, I hope we don't see that. But maybe we do. Otherwise, if you get a up hold around 480, then you can take this next shot between 480 and 505 for the next little blip of that trade. Cool. Yeah, I think we're good to go on this one. That's pretty clear for me. Do you guys have anything else? Any discounts? I love this, guys. I'm not a I'm gonna run a Black Friday thing. Although I'm already stocked. Yeah, stocked. That's great. But I'm not hanging out there. If you're from that community, just so you guys know who we do have. We have our boys. They're never leaving, and we love them to death, and they're live. And we got a lot more, right? Probably a lot more than you're used to. Yeah, got some of our boys from the Spaces crew. We got futures, we got equities, yep, long term, whatever. We got some crypto, and we got a ton of education. So yeah, we'll run something for you. I will post it today. I got some ideas, but yeah, we'll run something today through New Year's, and then I'll probably hit like 2 or 3 24-hour sales. And that's it. No more, since you guys have been asking, but I appreciate all your support, guys. All right. If that's nothing else, then I think we are good to go. So I'm going to call it there. Netflix to the moon. I love it. Adios, guys. Oh, did you want to see? No, we'll do it later. Adios.